All right, good night, everyone. I hope that all is well. Um, Deleen is here. So we are now live and waiting for everybody just to jump in. I am going to bring it over to Delhi in a second, which we can get started and everyone can introduce themselves. I hope that this will be, which I know that this will be a great session, and I hope that everybody can leave here with some knowledge. And when it comes to the Q&A, I hope you guys ask as much questions as possible. Over to you, Deleen.
All right, great. So thank you so much, Zaron. And we're so excited to be here for another Tech Talk Tuesdays. Now, as you know, this is the way that the Jamaica Technology and Digital Alliance connects with its audience from right across the length and breadth of Jamaica, and in some instances, even right across the region, to speak about a lot of the things that we know are important to persons within the technology space. And today, we're talking about something that sometimes makes people uncomfortable, but for the most part, it is essential for life, and especially when you are in business. We're talking about money, specifically investments, and whether as tech entrepreneurs or owners and operators of medium, small, or micro-sized businesses within the technology space, whether we are ready to accept investments to allow our enterprises to grow, to scale, and obviously to help us to serve even more of our customers or clients. And joining us today for this conversation, we have three very knowledgeable and experienced persons from within the tech space that know a thing or two about financing and what it takes to be investor ready. We are so pleased to have with us today Ingrid Riley. She is CEO and founder of Silicon Carib. We also have Darnell D. Allen. He is technical officer, capital investments with the Big E program, which I know quite a few of us would be familiar with. And we also have Raquel Seville. She is CEO and founder of Data Fluent. Thank you so much for joining us.
Oh, thank you for having us.
All right.
Yes,
Yes.
thank you so much.
Yeah, and I mean, I know we would have each had, very full days. It's at the end of the work day. So, I do hope you've had your coffee or your tea or, your cocktail if that's what you're into, because we're about to delve right into, this topic. So the first thing that I really wanted us to get into is this whole idea of financing when it comes to small businesses. What are some of the options that are available to persons? Because I think automatically when we think about investment in a company, the first thing that comes to mind may be a loan. But I know that there are so many different ways that a person could have their company financed if they're looking to scale their operations up. So I wanted to start off with you, Darnell. When it comes to investing and sort of seeking financing to grow your business, what are some of the options that are available to operators?
All right, thank you for that, Deleen. So the three traditional ways, as you had said, are loans, then you have grants, and then you have equity. And you have many different forms of each. You could have loans from developmental institutions such as DBJ, traditional banks, commercial banks, merchant banks, credit unions. You have different grant programs, whether it be from developmental institutions, both locally, regionally, or globally, or even government initiatives. You have different opportunities available for different businesses per sector. Then, of course, you have equity, which takes many forms, from as early as maybe a family member investing their own savings into a, say, a startup, for instance, going down more advanced to, say, venture capital funds or private equity funds. These are some of the ways that a business can raise capital as much needed in the business.
Mhm. Now, you mentioned venture capital. For those of us who may not be familiar, what exactly is venture capital?
Well, this also takes many forms, but it's traditionally institutionalized funds where different investors pool funds together with a common goal of investing, whether it be broadly per geographical area or per sector, with specific interests in specific organizations and businesses. So, and this is something that companies can access. You have many different venture capital funds across the Caribbean, Northern America, Europe, all around.
Mhm. And I know too that in some instances, persons may opt to bootstrap or even look for angel investors. So there are quite a few options outside of the traditional, means of seeking a loan. But in some instances, there are persons that may just not have access to this information, or they may just not be aware of a lot of the financing options that are available, and also what's required to enable them to be ready. Ingrid, I would love to have you jump in here to talk about the availability of information specifically as it relates to financing. Do you think this information is readily available, or do you think persons just need to be seeking it out more if they really are interested in this space?
Yeah, there's a lot of information that's available. It's available through Google, it's available through ChatGPT, it's available through institutions, it's available through communities, it's available through blogs, media, and all of that. But I kind of want to, if I want to call it, to bring it back to why an entrepreneur would probably want to get a loan or a grant or a VC or angel funding. I think before any entrepreneur seeks to think that they want money for their business, there has to be clarity before capital. There have to be understanding as to why do they want to raise money or take a loan. They have to ask themselves, is this the right time to raise capital or to take a loan? They have to ask themselves, what is the end goal that they want to achieve? Do they want to simply stop a gap? Do they want to scale? Do they want to scale to sell? Do they want to scale and have a big business so they can actually have it for generational wealth? There's a lot of questions that an entrepreneur has to ask his or herself before they even think about, oh, well, maybe I should go and get some money for my business. So I always like to always start with somewhat of an end in mind before even thinking about, and then after you're pretty clear, then you can go Google, Chat GPT, and go looking for things that may probably match what it is that you're super clear about in terms of what your mission is and what your why is.
And I'm happy that you brought it back there, because I think one of the key things that would need to be front of mind when you are considering seeking investment is exactly what your value proposition is. So one of the things that I would love for us to discuss is what really separates a strong investor-ready proposition from one that is pretty much more generic. I'd love to have Raquel jump in on this.
Yeah, sure. All right. So I think Darnell and Ingrid really set the stage and laid the foundation. 100% agree that you have to start with your why and think about the end. And the end being typically, are you going to exit or have some exit for yourself, persons investing in you, and then also are you gonna keep it private? I just want to have this forever and ever and pass it on to my children, etc. So in terms of thinking about a strong value proposition for an investor ready startup, I agree that you have to start there. What is the reason? Because that will help to guide the conversations that you have as well. It will help to guide the type of funding that you will seek. So I also think as well it's important to know that not all companies or businesses need, especially venture capital funding. And I know that conversation comes up a lot. We don't have enough venture capital funds in the Caribbean, etc. But I think it has to be said that not all businesses need venture capital fund, and it's just not suitable, because as Darnell would have described, venture capital it's pooled resources, and they're looking for scale, and not scale like, I can get 1,000 customers, but scale like, they can get 10x, 20x or more for their investment, right? So in thinking through that, based on the examples that Dana would have shared, you have loans, you have grants, you have so many different options that you can use to fund your company as you're thinking through, am I ready? Am I viable for investment? Think through first your why, and then, especially if it is that you want to have something that goes on for multiple generations, etc., then maybe you start off with a friends and family round initially, sell the people closest to you on your vision and what you're trying to do, and use that to build momentum and to build what it is that you're trying to do, whether it is your MVP, your proof of concept, get early customers to come on, give you feedback, especially if it is that whatever type of business really it is that you're doing. You really want to ensure that you can sustain yourself initially and get your customers. And then I think once you've had sort of steadied the ship and steadied some cash flow, then if you're trying to run and run very fast, then you want to probably look at getting maybe an angel or a VC if it is that your business can, fit into the criteria that VCs typically look for. So I think when you're thinking about viability, it's still the founder has to start with why. Why am I going this route? And do I need to go this route? And what options are available to me? Some I've known founders, different businesses, tech, otherwise they go the loan route, try to go to a bank, they ensure their financial statements are good and they have everything in place, and they go the route of getting funding through a loan, and they pay monthly payment each month, right? So it just depends. I think when you're thinking about viability, first start with, what is your end goal? What are you trying to achieve? And then based on the different options that are available to you, try and find something that fits you first. But I always think it's great to start off with friends and family bootstrapping before you start to bring on investors, before you start to give up equity. Look at all the grants that are available to you. I think those options are critical in the early stages of a company, because you really don't know how large, how big this company can get. And when you start just dishing out equity so early, it can be that you literally dilute yourself down to not a lot of ownership when this actually turns into something very successful. So I think it's just, one, just thinking about that end goal and then aligning yourself to the different options that are available.
Indeed. I was privileged enough to be in a conversation with Wes Hall out of Canada recently. And one of the things that he shared was, in order to start his business initially, his very first business, it was equity in his home and, really being able to pull on his network that enabled him to get that first 100K to start his first venture. And now, of course, as a serial entrepreneur, he is able to look back at that one pivotal move that he made as that starting point for the building of his empire. But of course, before we can get to the point of financing, and of course, as we're seeking to figure out our why, there are certain key things that you need to have in place as a business just to ensure you have structure, even if you're not seeking financing initially. Darnell, can you talk to us a bit about, the structure that needs to be in place for a business before they even consider having any sort of investment or financing for their enterprise?
All right, no problem. So I would like to appeal to both the diverse entrepreneurs, or whether it is founders or potential entrepreneurs that might be on this seminar. So define things as well as try to hit it on a street level as well. So you start up your business, you're very excited, bushy tail, bright eyed, make your way out there. But of course, to get into a formal system into the business the right way, there are certain things that you would need to have. And that includes registering the business first thing first. Simply you're going to for Jamaica, you go to the company's office, get the registration going. Then you want to get the right people around you as well. So as a business founder, you have an idea or you come up with something, some form of innovation. You may not know everything, but it's important that you build a team around you or even get the right set of advisors around you, someone with industry experience or business experience. So you have to get that into place. Then you got to develop your MVP, minimum viable product, the product that you're selling. As you said earlier, you need that value proposition now. And now you're seeking capital, whether it be from the bootstrapping, that may not be enough, that's from your own savings or from family. You got to understand your value proposition, which really answers the what, the who, the why, the what are you offering, who is it for, and why is it better or different from your competitors. You need to understand the competitive space as well as they're moving out to doing business. And that for me lays the foundation of what a company needs to do. And feel free to tell me to go on or not, Deleen.
No, please continue, because I think that
Yeah.
in many cases we think so much about the idea and about the product, but not understanding that in many instances, just getting in the door requires certain sort of structure being in place before you can even think about having these sorts of conversations. But I know for some persons it may be daunting to put this sort of structure in place.
Well, I'd like to again throw a little bit of oil in that water, but I'm saying, especially in the tech industry, the last thing sometimes that we think about is actually registering a business, especially in Jamaica, right? It takes so freaking long, right? And it's an arduous task, and you're trying to figure out which one is best for maybe your tax structure or whatever it is in the whole idea of all that. So in my mind, before even seeking investment, before even possibly even seeking to create a structure, go and validate your idea. Go and find a paying customer. Because if you can't find a paying customer and convince people to part with their money based on a product or service that you're offering in the world, then why should an investor even look at you? Why would you even bother to go and register a company if your idea is a dud? Right? And don't get me wrong, that's not a blanket statement, because there's sometimes you do have to have a legal structure to actually enable you to even maybe get that paying customer. But we have to understand that we're living in a digital time. We're living in digital Caribbean right now. And so we have to understand seriously what this idea is. Is it solving a problem? Can you get paying customers? Even before sometimes thinking about a legal structure that will enable you to maybe get a loan, get an angel investor check, get a VC check, or get a grant. You know what I mean? So I'm just kind of throwing those pieces of information, so we don't get caught up in the whole thing of black and white, when actually we live in a massive world of gray.
Yeah, definitely.
Fully agree with that thing.
I agree as well. And when it comes to getting constructive feedback or criticism of an idea that you may have, I'm certain that that's where it may be important to have a mentor or some sort of sounding board, persons who are already within the space that can actually help to validate that idea. So how important is it for you to have persons around you that are also sort of aligned with the space that you're hoping to be in order for you to get that sort of validation of your business idea?
Well, as I said, the only validation you need is a paying customer. A mentor is all way down the line, way down the line sometimes. But yeah, Raquel.
I agree to an extent. That is when you're starting out, kicking off, and you need that paying customer to really validate that product that you're offering, which is very important. The team you build around you, because one, you got something that you want to take out there, you want to scale, you want to bring that out to the world. You're gonna need help doing that, and people really work with, buy from, invest in people. So it's not just a great product, but also in people. So it's about who you are as a person and the people you surround yourself with. So if I may have some money and I may be looking at something new and exciting to put my money in, but it may not be enough for me as a high net worth individual or an experienced investor. But when I look and see a Ingrid Riley on the board or a Raquel Seville who's experienced with setting up a business as an advisor, it gives me confidence to put my money there, or to even say to my investor friends, hey, you may want to put a little in this, maybe I don't want to go all in or leverage myself too much. So I might say, I might find someone else and pool together those funds. So that team is very important. It gives also the strategic direction, because I might be a techie, I might have come up with this new technology, but what do I know about financing? What do I know about financial models? What do I know about even banking? I may not even be able to speak properly. And you're going to have to be able to pitch your business, to explain that great idea to people who may not know nothing about what you're talking about. You're probably talking about some high-tech stuff, and you're going up in your big words, and it's just lost on them. And you may lose out on opportunities that way. So it's important to surround yourself with the right team, and it's important to be relatable yourself as well.
Yeah, I agree. Funny enough, I agree both Daniel and Ingrid. um, because I think especially if we take it to the tech space, right? So I'm not starting a supermarket, I'm not starting a nightclub. If you're talking about tech and digital, both things are true. The people you surround yourself with is critical. Validating the idea is also critical. And I think for tech startups, we're in a space now where we have a lot of resources available to us, right? So with agentic AI, the rise of agentic AI, and you have tools like Replit, Lovable, where you can literally test an idea. You can build an MVP, a proof of concept, in seconds, in minutes, and test that out with maybe, I've run some ads on Instagram or wherever it is. I mean, Instagram probably and Facebook probably the cheapest in terms of cost to just test something out, see how many persons will sign up, join your waiting list, test out the product, that sort of thing. Because I think what we're seeing, especially, and I know Darnell can speak to this and Ingrid as well, especially in the investor VC space, there's uncertainty with everything that's happening globally. And, I mean, their startups getting funded, of course. Persons will always get funded because a lot of the times it's about sometimes an idea and also the relationship and the person, as Darna would have mentioned. So money will always move around. But in general, in the space, persons are kind of saying, hold off until the end of the year, until early 2026 if you're fundraising, because a lot of persons are being a little bit more shy with allocating their capital because of the uncertainty. So I think in that space, you really have to think, if you have an idea and you want to get out there, you want to start, you really have to think about, okay, how can I test, get some customers? So when I go in front of an investor, I'm not just selling them an idea, right? I'm selling them that there's some proof behind this, there's some traction behind this idea. So, and I think just the space and time that we're in is an awesome time for a person that have ideas. You can easily test it out. You can easily just say, create this app, create this, and test it out in a very small scale. It's not gonna be, I mean, let's be real, right? It's not gonna be elegant coding. If you're like a software engineer that's you want your code to be a particular way, it's not gonna be the most secure app that will be built. But all of those things you can fix in the end. All you're trying to understand is there any product market fit for this particular idea that I have? And then also this other side of it too, that I think I was just sort of listening to a podcast around this about Nigeria and how WeChat, a Chinese company, came in and failed, but WhatsApp didn't. And WhatsApp was not on the ground, but WeChat was on the ground, invested a lot of money, and they weren't able, because it wasn't just about product market fit, it was about culture fit. And I think in the Caribbean, that is a thing. We don't talk about it enough. We say product market fit and doesn't, but there's also culture fit for real. And those are some of the things when you have a startup you have to think about, because you could have this wonderful idea and we'll say, boy, you're ahead of your time. But maybe it's just a culture fit. Maybe people not seeing how they can spend money for this particular idea, while you see maybe in other markets and other more developed and mature areas, persons are spending thousands of dollars on that particular idea and it's already been proven there. So I think those are it's a little bit complex. I kind of agree with both Darnell and Ingrid, because on one idea one hand you do have to test, and on the other hand you do need that support of advisors and persons who've been there before to give you this kind of advice, to kind of explain to you that you need to think through some of these things, that maybe who you think was your ideal customer profile, and this is a person that's going to buy from me is not. So maybe the ads that you targeting, maybe someone, 18 to 24 who is single, etc., etc., and you're not getting anything, maybe that's not really your customer, right? So you do need some amount of guidance when you're building. Also, even to tell you about some of these tools that are available. Like, you do have persons, I've spoken to so many different founders, and they're like, what? Replicate Lovable? Never heard about it before. And those are things that you really need to be aware of. And sometimes you don't know what you don't know. So it always helps when you have people around you, advisors, or just maybe a mentor, maybe somebody can just pull on the list, come into sessions like this, plugging into the DA, Silicon Carib, DBJ, plugging into all these different spaces so you can get that knowledge. Maybe it doesn't come in a person, maybe it comes in a community. So I think both sides are really critical when you're building.
So definitely we see where it's important to sort of have a proof of concept before you are seeking any sort of funding. But we also see the strength of networking and community, especially when it comes to that tech space and you don't even know what you don't know, as you aptly said, Raquel. You've touched a bit on it, but I wanted to delve a little bit deeper into some of the things that we know that investors are looking for in early stage tech startups. So we know that we're looking for a product or a service that works, and possibly at least having that one or two sales, being able to prove that it's something that the market requires. But other than that, what are some of the key things that we know investors are looking for?
I'm just going to leave the floor
Darnell
to
or Raquel.
All right, so you gotta remember, for an investor coming in to put his money, he's expecting something in return. So the first thing any investor will look for is scalability. So you gotta be able to communicate your scalability plan effectively, because that's the first thing an investor looks for. I'm giving you something, you're giving me back something. What is my return in this? Why should I invest in you? So it goes beyond the value proposition to the vision of the company and the entrepreneurs involved. He looks also, as we spoke earlier, about the team that you would have put in place. Look at how knowledgeable is the team chemistry, the experience of the team, whether is that they have technical experience, it may be creating a new chemical product or whatever it is there a chemist on the team? You may be creating a new digital product. Is there a programmer on the team, somebody like that? Or is it that you are buying it from somewhere else? So how do you improve and innovate the business with just a long-term vision? And I keep going back to scale, because they're putting in their money and they're expecting significant returns, especially when they come in early, like at the angel stage. That's very risky. So they're expecting risk and return, as we know. So I don't know if anybody want to build on that.
Yeah, sure. Well, I know Ingrid wanted to win as well, but Ingrid, you can close it out. I'll just jump in quickly, adding to what Darnell said. For sure, scale, for sure. Looking at the experience of the founders. I think that is important to think through for different persons, especially when someone is investing early, right? They want to look at your team, want to look at the founder, this person have experience before, are they a repeat founder? And it doesn't even matter if you failed, right? Have you done this before? Because failure is also very, very, very critical lesson in the startup space as well, because you learn from that. And I think also another thing is also the exit, right? So besides looking at their return on investment, they're also looking, okay, how would I get my money out if I want to? Where's that option? I know sometimes founders don't think through an exit because it's their baby, and you're like, what? Sell my company? No, never. No, it's, forever and ever. My grandchildren will have this, but a lot of investors do want to think through, what is that? How do I get out? What if something happens along the way and they don't like what is happening anymore, or they just need back their money? So I think thinking through your own exit strategy, so when you're having those conversations with investors, you're aware of what is happening, because a lot of investors are looking for how will they get their money out. Are you gonna IPO, which is initial public offering, like companies that would have gone on the stock exchange and giving up some of their shares to the public. Is that something that you're open to? Is something that you want to do? Are you open to being acquired? Like a M&A, a merger and acquisition, where maybe a larger company would acquire you, and then that way the investor can get out their money plus returns. So it's thinking through that exit strategy, because a lot of investors are looking for that. Ingrid, past you.
Yeah. And
Well,
there,
the business of investing, I've learned over the last number of years, is highly subjective. And investors invest for very different reasons. The smart investor, what she would do is to think about what exactly does her portfolio, what does she want her portfolio to look like? And that investor would say, all right, cool. She will also be very smart to know that in her portfolio of, say, 2025, she knows that maybe around 80 or 90% of those startups will burn up her money. But she's looking she's looking for those, making those decisions and looking for those startups, those investments that will basically pay back for those startups that died. So she will have an investment strategy. Sometimes investors invest, yes, in the person, yes, in the idea, yes, in the geographical area, yes, in that particular industry, because they know those industries well, or they know that those industries are trending in a particular direction, and so they want to have a stake. They want to basically bet on that jockey and that startup that is in one of those 3, 5, 7 sectors that they know and know that are trending in a different direction, in a particular direction as well. So she, a very smart investor, she'll look at all these things. But like, let me tell you, it's very, very subjective. And sometimes what I've seen too is that smart investors, she would basically, I know this one going to burn up my money, but I'm going to learn what this particular thing is about. I know this particular startup is going to burn up my money, but I like this individual, and this is maybe not the best idea that they have right now, but I'm gonna allow them to fail on my dime, and then I'm waiting for them to come with a better idea later. I've seen it many times. So this whole business of investing is highly subjective, whether you're an angel, but especially angel investors is very individual. They're very personal about it. With venture capital, some of them can be very cutthroat and cold. But again, the smart investors that I've seen, she tends to be very, very a little bit more holistic about certain things. At the same time, that investor, she definitely wants to make money. But there are so many different routes to making money, while at the same time building relationships with certain entrepreneurs, learning about new markets, learning about new products, and carving out relationships in a particular geographical area or in a particular industry. So it's very, very, very subjective.
and just to weigh in before you move on quickly, Deleen, notice that you'll have 3 different panelists. The question we touched on many important points: the scalability, the innovation, the team, the exit, the subjectivity of the investor themselves. There's one important factor that none of us touched on, and for an important reason too. That means if you have somebody on the street, they would come to it first, and that's the revenue. Is it that the revenue of the business is not important? No, it's very important. Traction is very important. But guess what? Most businesses that is within revenue and great revenue are not really seeking financing. So it's the ones with the potential or high potential that are not really there yet. That's the one investors tend to come in at the right time. So they hit that scalable returns and to come in at the right time. But traction is also very important. Revenue is very important, especially for higher level investing, just to add.
Yeah, very much so. Because investors we know have invested in things written on the back of a napkin. They've invested in things that is from a pitch competition that they happen to have gone into. They've invested on things that come in on a pitch deck or through a data room that they have set up as well. There's so many different ways in which they do, because as we know, there are a lot of investments that have happened with startups that are called pre-revenue. But because again, as you said, they're very high growth oriented, they're really solving an amazing problem, and they want to get it on the ground floor really early. That's early stage. And then, of course, they can go to like Series A and Series B and Series C. So there are
Right.
different kinds of investors for the different stages of a business. And so it all depends on where you are and what kind of money you're looking for, what kind of investment you're looking for as well. But
Right.
it's a beautiful industry. It's highly subjective and highly risky and exciting. And yeah, it's it's something else. Yeah.
Indeed, it is, and I like the fact that in addition to speaking about uh, the reasons that investors actually invest, about that being subjective, but also the stage of your business that you decide to look for investment. I mean, that is also something that is subjective, and one need only look at the prospectus of a company that's seeking to list on the stock exchange to see that persons will
Mm.
require financing for different things and at different stages of their business. It may be a 5-year-old company, 10, sometimes 15 or 20, but then you have to be very specific about how that financing will help your company to grow or to scale or to innovate, in order to attract the attention of potential investors. And we have seen where a lot of companies have gone on the junior stock exchange and they've been quite successful. And in doing so, they've gotten investment from the man in the street. But then we also have seen where there's some persons who perhaps were not quite ready for that level of investment and the challenges that they would have faced as a result of that. We also recognize that when it comes to documentation and KPIs, in some instances, persons may not be quite aware of the key metrics that investors may be looking for. So when it comes to those sorts of key metrics, what are some of the KPIs or documentation that investors generally tend to look for?
Oh, I can
So
throw from his place. I know Darnell will have a lot of insights from his perspective.
I'm
Um,
sorry. The reason why I point to Raquel a lot because she she's one of our Techstar investees, and so she's going through all the ropes with all kind of investors. So she has a wealth
yes,
of knowledge around that. So that's why I'm just here just to look really.
that's hilarious. All right,
oh, you
so
want me to start off? Or I can go ahead, Raquel.
yeah, sure. One thing that, yes, coming out of Techstars and preparing for having conversations with other investors as well is creating what we call a data room. And while that sounds fancy, it really could just be a Google Drive. And in that data room is literally where you'd have all of those things that you mentioned, Deleen, right? So you're gonna have your financials. I know sometimes financials can be a bit daunting for companies, but you really want to ensure that you have an accountant, whether in-house or an accounting firm, that supports you with creating your financials, right? Just your basic financials, your balance sheet, your profit and loss, and your income statement, right? So you just want to ensure that you have all of those set up so that you can have that in your data room for your financials. Next thing you want, or you should have in your data room, if you're thinking through, like if you're thinking about just folders that you'd have in Google Drive, is that you want to ensure that you have just information about your company structure, your articles of incorporation, proof that you are incorporated. So I know before we were saying, for a tech, you want to validate the idea maybe before you register the company. But now when you get to the point of investors, you have to have a vehicle for the person to invest in, and that's a company, typically a limited liability company, right? And that simply means that you're literally, as it says, limiting the liability to you and your investors, shareholders, etc. If anything should go south. So nobody don't try and come for your little house, your little car, that sort of thing. So typically it's a limited liability company that you would have created to be able to get that investment. So you want to ensure you have all of those documents in one place. So articles of incorporation should be there, proof that the company is registered, whether it is Jamaica or otherwise, because I know that everyone registers their company in Jamaica based on any tax benefits, the type of company. If you're registered offshore in St. Lucia or somewhere else, just have those documents ready. But of course, in some instances, if you're seeking funding locally, you may need to have a local company as well. So I know it can get very complicated very quickly, but just simply have information about the company. Next thing you want to have is an idea of your team. It could just be a basic org chart that you have, right? It's a basic structure that shows, okay, this is, the founder and CEO, maybe a board, and then maybe these are the team members, what their experience is, what areas they're focused on, so persons can get an idea of your team. So it could be as simple or as fancy as you want to do it, but just an idea of what your team structure looks like. Some instances, some persons already have a team, so that's when you really have to play up maybe the co-founding team, right? So maybe you don't actually have like full-time staff, but the co-founding team is really, or the advisory board or the board is really driving the organization. Then you just want to ensure that you have that documented experience, maybe previous corporate experience, maybe previous startup experience. All of those things are critical in having that. Next thing you want to have in that data room is pretty much you can have like marketing PR kind of things. Maybe you're mentioned in any articles. Your startup featured somewhere that you think would be good, that shows some amount of visibility and also viability around the organization. You can have that in sort of your marketing PR lookbook. It also helps as well if you have an idea around product. So that could be like another area, so you can give an idea, not your trade secrets, because typically for your data rooms, because you're sharing it with many different investors, you want to be very, very careful that what you're putting there is not information that you wouldn't be, I don't want to say get leaked, but you wouldn't be okay with just sharing with maybe another person or another investor, etc. So you don't really want to put like your whole company strategy and all the products you're launching when you don't want to put somebody that's very high level, because really and truly what this will help the investor or anyone assessing your company to do is to get an idea of what is happening, what do your numbers look like, what does your team look like, because again, as I mentioned, that's important. Your financials give an idea of revenue traction, and then your team give an idea of competence, and just understanding who is behind this particular thing. And then also everything else just kind of helps to kind of add to that story and layering on the story. And I think you mentioned Deleen KPIs. I know Darnell has a whole lot of different things that he can add to that. So Darnell, I'll pass it to you to probably jump in on some of the KPIs and other metrics and anything that I may have missed as well. But that was just like a high level data room example.
Yeah, I think you basically covered everything, Raquel, but there might want a little bit more information on the background of the founders because they are critical to the business. And they might want to spend some time getting to know the founders as opposed not just getting the documentation on them, who they are, doing a little bit by background, but also getting to know them as well. How do they take instruction, or how do they execute on the vision that they say that they have, the plan that they say that they have? How well do they know the company? So would that be a smaller company, just the founders, the partners, or a larger company, the people responsible for the strategic direction? Are they ready? Do they know the numbers of the company, the revenue, etc., the margins? Are they ready to pitch? Probably talk about pitch a little bit down more on the program. Things like that are very important. And just getting to know the person, their whole attitude, these are the things that determine whether you go through with an investment. Because the company's success and failure really depends on the people who are responsible for the strategic direction of the company.
And if I can just jump in here, Darnell, you mentioned phrases like take instruction and getting to know the entrepreneur. I want to emphasize here that not all money is good money, and not all investors are perfectly matched to you. Saying yes to an investor and an investor saying yes to you is pretty much like business dating. It's like business marriage, and you have to take in consideration if it's not just about the money. It's like, who is this investor? What's their background? What's their reputation in the market and in the industry? What have other investors said about them? Other of their investees said about them? And also, you have to be clear about do your values align with that particular investor? Not all money is good money, and I tend to see here, because we're kind of young still across the region. A lot of entrepreneurs just taking any check that is given to them, and they always end up with at the back foot with that one. So you really have to get to know who this investor is, and do your own due diligence, because just as how they're getting to know you and see if you are a match for them, you definitely have to do the same thing for them. I had a conversation today with an entrepreneur. Said, "Hey, I have a whole bunch of investors who are interested in that particular business, but I want none of them." And because they had an attitude that, oh, because they're going to give a small check, it means they're going to jump on my board and tell me what to do. Or this individual is when she did the background, she realized that that individual has a competing startup in their portfolio. So why would she be interested in mine and me wanting to join that competing thing? So you really have to be very, very smart about how you go about saying yes to investors. It's not just about the money. You have got to understand the context, right, that this particular investor, whether it's a he or a she, what are they bringing to the table, and make that decision that's very, very aligned with who you are, what your values are, what do you want to get done with your company, how you see yourself working with this individual. Because sometimes some investors just want to cut you a check, speak to you every quarter, and that kind of a thing. There's some entrepreneurs who like that, and then there's some entrepreneurs who want a more mentor kind of a relationship with their investor, because they can have that kind of relationship because that investor has the knowledge or the connections, or to open doors for them. So it's quite, I don't want to say complex, but it is layered. So it really is not just about being investor ready and taking any check that comes to you. It's way, way, way more layered than that. And entrepreneurs who have taken different kinds of investments can tell you stories for days. Things that went well, things that did not go well, things that they learned in the process of engaging with investors, what they've learned over time, what their values are, what do they need as an individual, help, basically being matched up with a particular investor. So it's very, very layered. It's definitely not as cut and dry as it appears sometimes.
Agreed. You have to learn sometimes as well to meet in the middle, because as the founder, it's your baby. So you're very passionate about this. You have this direction that you want to go in. But sometimes having like experienced voice can help that strategic direction as well. You have to learn how to meet in the middle.
Indeed. I like the fact, Ingrid, that you likened it sort of to marriage. I think often when persons are seeking funding, they kind of believe that it's the financier that holds all the cards, not understanding that it has to be a mutually beneficial sort of relationship, based on shared values, shared goals. And at the end of the day, as an entrepreneur, you don't want to get steamrolled by the person that's investing in your company. We also see where, especially through Silicon Carib, you have been able to really master this art of telling the tech story of the Caribbean, and really giving a voice to a lot of these tech innovators right across the Caribbean region. But we often find that persons within the tech space tend to want to have their work speak for them. They may not really want to be involved in front of the camera, that sort of thing. But how have you seen storytelling and thought leadership really help entrepreneurs to distinguish themselves, especially to investors who may be looking for that next big thing?
Yeah, well, storytelling is basically people getting to understand. It's almost like you're the CEO of a company, so you can choose to be upfront and definitely build your personal brand, and have that basically be a lead magnet to customers, to partners, to investors, to events and different things. But I think, and there's some people who like to be permanently in stealth mode. They don't want to be known. They just want their product to speak for themselves. And we look at like a story, an example like Calendly. I didn't know it was being built by a black man all this time that I was using it. I didn't know that until he came from out of the shadows and say, hey, until he reached a particular heights where it was a $1 billion company. Then he was like, hey, what's up? That's me. And so that's a personal choice, and because maybe his product could allow for that to happen. And then there are other times where a startup would benefit from being in front of the camera and telling their stories, whether at events, within communities, forum like this. Who are you? What problem are you solving? What's the name of your company? Why have I chosen to do this? This is who I am. This is where I want to go with this business. And so it really depends on the individual and what they're choosing to do. But I like when entrepreneurs tell their stories, good, bad, and indifferent, because it offers a learning path for everybody. It really is a great opportunity for everybody to learn and to see what is possible. What are some of the mistakes that they could look out for? What are some of the opportunities that they can grab on? And so I think storytelling, especially now in this digital age, is kind of crucial. It kind of helps you to stand out. It's a free marketing tool as well. So it really depends on the individual, but they're definitely, I think, more good than bad than being out front and telling your story about who you are and what you're doing and why you're doing it.
And on that note, I'd love to have Raquel jump in here, because of course we know visionary storytelling is extremely important, to sort of tell the story of your company, your product, that sort of thing. But how can tech entrepreneurs strike a balance between the storytelling and also being data driven when they're talking to investors?
Yeah, oh, that's a great question. So I think, well, Ingrid sort of laid the foundation again very well in terms of the different options that some founders will take, where some persons may be very visible, some persons prefer not to be very visible, push the product, maybe even push forward other co-founders or other members of their team, but they kind of stay behind the scenes. And I think that's a very personal choice in a lot of instances. In some instances, it may get to the point where you don't have a choice, and you really have to be out there and telling your story and selling the vision, because, as Darnell said, investors invest in people. Like, people sometimes see themselves in other founders, and they'll just write a check, or they'll just invest their support. And it's not always about writing a check, to be honest, right? As much as we're talking about being investor already, sometimes someone can just, introduce you to someone who can give you probably your largest customer.
Yes.
So it's much bigger than even writing the check. And sometimes being out there and being visible and telling your story and sharing your story can help with that, right? So I think it's very personal to the founder and to the founding team how they approach that particular angle. But I mean, for me personally, the road that I've taken is sort of balancing the chaos of telling our story, sharing our story, and being on there, while also maintaining as well kind of behind the scenes profile, so that we can really and truly stay focused, because it does take a lot of energy to do either of the two, right? And sometimes you really do have to put a lot of energy into focus work, building, scaling your team. There's so much that you're doing in the initial stages.
Yeah.
So in balancing that, as you said, with being like, data driven for your investors, and them being able to get the kind of insights that they need. Again, it's really, ultimately, when you're a founder, you have to, and I mean, we think through this sometimes where we say, okay, let's focus on that, like that $1 million thing that you need to do, right? So you wake up each morning, you have 10 million things you need to do, but if you're to rank them by value in terms of ROI to your company, to your team, what's that $1 million item? And then maybe what's the next $500,000 item that you need to get done, as opposed to plugging away at these little $10, $20 items that give you a little bit of dopamine hit, but realistically, they're not moving and pushing you forward, right? So I think in terms of focusing to get that value and to be data driven and to, get the ROI out, I think you really have to think through what are the things that I'm focused on as a founder, because focus is critical and there's a lot of things that's taking away your attention. As I said, even just going out and telling your story, that takes, if you have to go conference, if you have to do panels, if you have to do all of these different things, that also will take you away from being able to, hold your head down and get things done. So I think it's really a very personal thing. And if you're a solo founder, it's even more challenging, right? Because when you have multiple founders, you can balance, okay, here, what you're gonna take this investor meeting, I'm gonna go to this conference, and then you're gonna do this panel. Great, fantastic. You can spread that load, but I'm a solo founder, so it's very challenging to balance all of that. So I have to find to kind of meet somewhere in the middle, that Darnell just said. I find meet somewhere in the middle to be able to manage that chaos, because it is very taxing to be able to say, okay, these are the things that we need to focus on to be investor ready, to have our data driven metrics, etc., ready, so that we can have these conversations that will make sense and push us forward, as opposed to balancing telling our stories and, of course, balancing that with also doing the work.
Thank you for that. So we have just about 4 minutes before we close off, and I just wanted to get your thoughts, each of you, on what you believe needs to radically change within the Caribbean startup space if we really want to unlock more investment. I'll start with you, Ingrid, and then Darnell, and then I'll close off with you, Raquel.
Girl, let me reload my list.
I was not expecting that.
Unlock. In Jamaica, can we finally enact and put out there in the ether and the changes in the Partnership Act of 18 how long? Yes, there's some. Yeah, that needs to just simply be scratched, and the changes that have been recommended just enacted. But also, I think most importantly, to be honest, is to raise our appetite for risk and to understand that the Caribbean, English, French, Spanish speaking, and our diaspora is full of a lot of great entrepreneurs with fantastic ideas. They're solving problems for local, regional, and global things. And that we've got to understand that there has to be some level of risk, that as an investor, some of your money will burn up. But if you have a good portfolio strategy in terms of how you go about doing things, then you will, over time, definitely win. So I think we just need to raise our appetite for risk across the region and to bet on our Caribbean entrepreneurs. And then get rid of these laws that's been on the books from 18 how long that will allow money to flow more freely within each nation, across the region, and then internationally into our region. And I'll leave it there.
Thanks for that, Darnell.
I would add that I would love to see the awareness on both sides of the demographic divide being raised. So on the investor side, as Ingrid so eloquently put, the risk appetite need to, I would say, come up some more. And on the entrepreneur side, just the knowledge and the business sense and the business ethics need to be there. The knowledge of how to run a business, how to even pitch, things like those. It needs to be in place for an investor, whether it be institutionalized or individual, to feel that confidence in putting his money there, because we all understand the risk involved within it. But at the same time, you want to feel comfortable in putting in your hard-earned net worth into an venture, not just that it's exciting, but that the people behind it has the knowledge and the, what you call it now, the strategic direction to scale these businesses. That's what I would add to that.
Cool. And Raquel?
What can I add that Ingrid and Darnell hasn't said? I mean, I guess I'll look on it through two lenses. One for founders, entrepreneurs in Jamaica and the Caribbean. I'd say, even if you're building for the region, sometimes you need to look outside the region. for opportunities, for capital, for even connections, right? And then on the flip side of it, I would say in the region, definitely need more, I mean, a stronger risk appetite. And I mean, we have these conversations all the time because, we have these conversations around, okay, well, we need a successful startup to exit to be a proof of concepts or more of those, so investors can say, well, this is an example, I can use this. Because otherwise, they're gonna say, well, we don't see any examples of any successful tech companies or whatever that have gone and scaled and et cetera, et cetera. So we definitely need those examples, but it's like chicken and the egg kind of thing. We need more capital that is more patient capital that's not trying to take 80% of your company for 100,000 US or something, some
Yeah,
crazy thing.
that kind of foolishness that's going on.
So, so I think we need that kind of patient capital and understanding that, especially around tech, even though tech is getting a little bit more democratized in a way with agentic AI, but to get to scale, to get to customers, to get to traction, to get to building a community that is sticky, it takes time. So I'd say definitely patient capital as well.
All right, thank you so much, Ingrid, Raquel, and Darnell. And of course, we have gotten quite a few comments and questions in the chat. I'm going to start going through a bunch of those. So, of course, we've gotten quite a few big ups, for each of you. We also have one question here from the Learn, Grow, Invest community. And they're asking,
Look,
can I get
Jermaine.
investment without giving up ownership of my company? So I know we would have touched a bit on that in terms of the different types of investment opportunities, whether it's through a venture capitalist or an angel investor. Does anyone want to touch a bit on that just to clarify?
The short answer is no, because investment by definitions means someone is putting in something expecting a return on whatever that is. So I think maybe what they are asking is, can they raise money without giving up ownership of their company? And that would be yes. There are different avenues they can go down in raising money for your company without giving up ownership.
Yes.
That also included.
Okay,
The,
great.
the nuance of that phrase is we're right. You're correct. As opposed to like, nah, he wrong. But you're right in terms of using the phrase investment, because it basically what it basically boils down to in my mind is a convertible note, which is basically a small is a cheap loans for startups, right? And if you don't pay back the convertible notes within a particular time, it converts to equity, right? And so that's where you'll get they'll get a slash thing. But it's in an investment. It's an investment still in terms of like, oh well, I believe in you kind of a vibe, and I'm definitely going to lend you this money at this particular rate for this particular time. But if you can't give it back to me by that particular time, then I'm going to get equity in your business. So that's a convertible note. Yeah.
All right. MG has also asked, how do you know at what point do you need an investor? I know we touched a bit on this as well, but we can delve a little bit deeper into this. So it's dependent on what you want the funding for, and also, exactly how you plan to use the money. But who wants to delve a bit deeper into this?
I mean, the short answer for this one again is, I am doing business, I need money. I can't qualify for grants, I can't qualify for loans. So I have to turn to an investor. So at that point, you need an investor. You can't qualify for the loan, and you're not able to access grants. So that's when you need an investor.
Yeah. So I think, and to just dovetail on that, really, it's really about timing, and timing is really everything. Sometimes they say that the best time to raise capital is when you found product market fit. In other words, there are customers who are giving you money, and they're like, yeah, that problem, I will pay you this dollar to solve this problem for me on a consistent basis. Or you're growing and you need to scale, or there's clarity around a clear path to profitability, or the demand for your product or service is so great that it make you sweating at night, because it's like, damn, how am I going to fulfill this? I need an injection of cash to meet this need and that kind of a thing. So yeah, you have some sort of a pressure where it's a boy, them really, really love this thing, and I need some backing to make it and then go. Raquel, I don't know if you want to add to that.
Yeah, I was gonna just add to all of that and also say that I think when you have a company, it's good to also do forecasting for your cash flow. And if you're, I mean, just bringing it down to the raw metrics, like if you think you're gonna run out of cash in the next 6 months, 12 months, based on your income, your revenue patterns, then that's definitely something that you want to get ahead of, because having these conversations with any type of, any type of investment or investor that you're looking at, even if you're looking at a grant, it's not a tomorrow thing, it's going to take a while. So I think just a lot of founders, if you're not a financial person, then maybe it's good to get an accountant or someone financial, or just try and find good resources and do some cash flow projections, see what that looks like, with everything that you're expecting to come in, everything that you're expecting to go out over the next 3 months, 6 months, 12 months. And if you're looking like you're going to have a pinch somewhere along the way and you won't be able to meet your immediate obligations, then you definitely need to start ramping up your efforts around getting investments, whether it is loans, grants, friends and family round, to help you get through that tough period. But it's really and truly trying to look ahead of where the pinch is gonna come from.
Yeah.
Thank you for that, Raquel. Indeed, we have to be creative as we're looking to solve this problem of or seeking financing for our venture. We also have a question here related to grants. So Learn, Grow, Invest community wants to know, how does one become aware of the grants available? Apart from maybe the DBG funding, haven't heard about much else. Where would we recommend that would be a perfect resource for this information on grants and funding for entrepreneurs?
Well, grants typically come from government or developmental institutions. So you got to keep close to these institutions, whether it be online news, seminars, things like that, and just being in that network. So you do, for instance, you might be a farmer doing agriculture. So you want to keep yourself close to a RADA or any little greenhouse seminars that's going on. So you keep close to these spaces.
Yeah.
It's free money, so
Absolutely.
not just out there like that.
Absolutely.
And adding to that as well, I think what can help is you literally can set up like Google alerts. If you're thinking outside of like Jamaica, if you want to look globally, because some grants are not limited by geographic region, or some grants are actually looking for persons in certain geographic regions. So I think what I found helpful is if you just sort of maybe set up an alert to identify if there are any opportunities available, grant opportunities, and you can just filter through maybe what is not suitable for you specifically, but that could be very helpful. I've discovered tons of grants that are like that even seeking for Caribbean companies and Caribbean founders that you see in the local space. So that's also another way as well.
That's amazing. And of course, join communities, join online communities, WhatsApp communities, in real life communities, and stay close to people who, like Raquel, who curate that kind of information, and they'll share it with you and you'll share with others. So, yeah.
Absolutely. And of course, if you haven't yet joined our WhatsApp community, the JTDA WhatsApp community, now's the time to do just that. We are always sharing information on grant funding, scholarships, and other opportunities for persons within the tech space. I have a question here as well from Dwayne Stevens. So he's asking, what laws were Ingrid referring to earlier that require change to assist Jamaican entrepreneurs and the investment landscape?
It's called the Partnership Act of 1807. It's something like that. If you put in Chat GPT the laws that are preventing investments from flowing in Jamaica and the Caribbean, it comes out as number one. But it's called the Partnership Act of 18 something, and it will give you the details in terms of what it is, why it's preventing certain things, and where is it right now. I think we met with Minister Aubin Hill last year, and he was telling us that the changes have been made, and that is basically stuck in Parliament. It's on the long list of things to do in Parliament. And basically, when this law is changed, what it will allow for the local formation of venture capital funds, and the easier flow of international monies into those venture capital funds, and so that was local people can actually register, fund, and get money from locally formed venture capital funds. Maybe y'all can help to put some stress on Minister Albin Hill and get some other lobby groups like PSOJ, DBJ, all the other allies that are out there, JTDA, to come on board and say, hey, what's up with this law? Why is it right?
Yes.
You never know.
Yeah.
Voices raised can change things.
Yes, it does indeed take a village for you to get traction and to have that sort of change. We have someone asking for the WhatsApp number. Don't worry, we'll drop it in the chat. So you'll be able to add that so you can be part of our WhatsApp community. Also got a few shout outs here, of course, Stacey Hines, our past president, mentioning that we need the local businesses to become customers. Yes, indeed, that is something that we're looking forward, that we do need if we want to see true growth. And we've gotten quite a bit of support here, and we're seeing persons in the chat. Michael Mullings here saying that we need less incubators and more GTM focus. And he has gotten quite a bit of support for that as well. And of course, we know that after today's Tech Talk Tuesday, the conversation will continue. We do invite you to stay tuned to the JTDA. We want you to follow us on all our social medias, on all our social media channels. So that's on Instagram, we're on Facebook, we're also, of course, on Instagram. Look for us, the JTDA. Join our mailing list for more updates, and we're dropping that information in the chat. And of course, we want you to stay tuned for our next session that should be happening next month. That's July, where of course we'll be delving into another interesting and exciting topic within the tech space, of course, with experts within the field. We are just at about the end of today's session. I want to thank you so much for joining us. Thank you especially to our guests, Ingrid, Darnell, Raquel. Your insights are invaluable. Thank you so much for your candor, for your honesty, and of course for sharing your insights with our viewers. Of course, if the persons that were not able to catch it tonight, the beauty of it is it will be up on our YouTube. It will be up on social media. So if there's a portion of it that you didn't quite catch, or if there's something that you want to send to somebody that you know they will be interested in this information, please share the link, share the information. Let's continue that conversation. Of course, I want to say a very special thank you to the JTDA team, to Zeron and the rest of the team that helped to put all of this together. Thank you so much. Thank you to all of our viewers. Thanks again to our guests. And please be sure to join us for our next edition of Tech Talk Tuesday. Until then, I was your host, Deleen Powell, VP of Marketing and Events with the JTDA, and I'll see you again soon. Take care, everyone.
Okay.